The income statement is simply a statement that shows in detail how much profit we are making, how much loss we are making in a particular period. So it is a summary of trading activities over a period of time. So our profit is simply the difference between our income and our expenditures. So in our income statement, we use what is called the matching or cross concept. So income statement is prepared on the principle of matching or cross, which simply means that if we have any debts for which we have enjoyed the service, we need to charge it. We call them accruals. So if we have salaries that we have not paid, add them, charge them there because people have worked. But if there are prepayments, services we have not enjoyed, like electricity, subtract them because these ones will understate your profit. So that's basically what the accruals concept simply says. So also, we need to understand that in the income statement, we only have what we call revenue expenditure. And in the balance sheet, we have what we call capital expenditure. Revenue expenditure is simply the expenditure on operating expenses, depreciation, rentals, electricity, to make sure that you operate smoothly. Capital expenditure looks at you buying fixed assets like fittings and fixtures, land. Those ones you can't charge them as an expense. So people make a mistake to say we bought furniture, so that is an expense. No. That is capital expenditure. Only revenue expenditure is included in what we call the income statement. So income statement, it is a combination of two books. One we call the profit and loss account. The other one we call it the trading account. The purpose of a trading account basically is to produce what we call the gross profit. And the purpose of the net profit and loss account is to produce what is called the net profit. All right, so we will look at the structure of the income statement. So income statement is divided into parts. The part that produces the gross profit and the last part produces our net profit. So we firstly need to look at the first part of the gross profit. This is the first part of the income statement, which has sales, less cost of sales. We add purchases and the indirect expenses. So the top part where we have the sales and less cost of sales, we call that the gross profit. But under the cost of sales, we have a component where the purchases come in. So in the purchases, we understand that purchases are goods that are bought. And as we buy goods and bring them into the business, we accrue expenses of transportation and customs duty. So according to the standards, this is an expense that we can simply add to the purchases. All right. And the net profit, we have what we call less expenses, which are the operational expenses. They're the indirect expenses, like salaries of workers, rentals, electricity, carriage outwards. When we add all these expenses and we subtract them from our gross profit, what we get is called the net profit. Now, how does the structure look like? So before I look at the structure, the expenses that are there are classified into selling and distribution expenses. We have administration expenses and financial expenses. Under selling and distribution expenses, we could have salaries of sales staff, commission, traveling expenses, the marketing of goods or advertising. These ones, you can group them if you want under selling and distribution expenses. And under administration expenses, we have salaries of general staff, rentals, insurance, telephone, heating. These expenses are administration expenses. In financial expenses, we may have and interest on loan, and bank overdraft. So these ones are expenses that we must consider. But I'll give you the general format that you need to have. All right. So the general format of our income statement looks like this. So we have the sales less sales returns. What we get is called the sales turnover. Then we less cost of sales. We start with the opening stock. We add the purchases, and we less purchases returns, if any. Why do we less the purchases returns? These are the returns that we less returns because sometimes when we bought things are damaged. Okay, so we use that. We subtract them from the purchases, and these are called the net purchases. So to the net purchases, we can add expenses, which we call direct expenses, like carriage inwards, transportation for bringing, or transport for bringing the goods to the business, or customs duty. We add these ones here. So the total is the cost of the purchases. So when we add the cost of the purchases to the net purchases here, we get the total purchases. So the total purchases, we add them to the opening stock, and we call this the cost of inventory. The cost of inventory, or the cost of stock, will subtract the closing stock, and this is what we call the cost of sales. So when we subtract the cost of sales from our sales turnover, we get the gross profit. So this is where it's ideally supposed to end, but it will not end there. There could be other incomes that we could have that can be added to the gross profit. For instance, discount received is a gain, you can add it to the gross profit. Commission received, you can add it there. Or a reduction in bad debts, you can add them there. So these ones are now what we call our new gross profit. So to the gross profit, we will less our expenses. So expenses, these are what we call the operational expenses. Carriage outwards, sometimes we would want to transport these goods outside. So we have discount allowed, we have salaries and wages, we have rent, we have bad debts, we have depreciation, we have light and heating. Now, these operating expenses, you can rearrange them if you want into sales, administrative, but the format does not make you lose any marks. Just to explain a few items here. What is a bad debt? A bad debt is simply an accrued expense that comes about because we had people who owe us money, then we decide to write them off. Okay, so that's what we call a bad debt. So we also have what we call carriage outwards. Carriage outwards is simply the transport costs that we have, because we have realized there is no transport to give these people who are going out. So we use our own transport, our own fuel, and we burn our gas, because the transportation costs that we are having is our own cost. Are we together? Then we go to our total expenses, which we subtract from the other income. So when we subtract our total expenses from the other income, we get our net profit. So now this is what we call the income statement. So if our expenses are more than the gross profit, we will call that what? Our net loss. But if our expenses are less than our gross profit, we'll call that a net profit. So we're going to look at an example of these parameters here. We've been given opening stock, sales, purchases, returns, discount allowed, returns inwards, returns outwards, discount received, discount allowed, carriage inwards, carriage outwards, closing inventory and the purchases. So we are asked to come up with our income statement. All right. So we'll start. The sales figure comes there. Do you have any sales returns? Returns inwards. Is sales returns inwards or returns outwards? So returns inwards. So we sold, but they brought them back. So we subtract the 500 there. So 25,000 minus 500, we get 24,500. This is called the net sales, or the it's also called the turnover. Okay. Then we go to the cost of sales. Cost of sales is a combination of this arrangement. So we start with our opening inventory. We put it there. Do we have any purchases? So purchases are here. What purchases do we have? You check purchases, we have 12,000. So we put 12,000 there. You less if there are any purchases as returns, then we get our net purchases. So 12,000 minus 2,000, we get 10,000. Then we add carriage inwards. So the transport or bringing the goodies into the business, the 50. So these ones are our cost of purchases. Then to the cost of purchases, we would add our excise duty if any, but if we don't have it, we just less what? Our closing inventory. So this is called our cost of sales. So we subtract the cost of sales from our sales turnover. So this will give us our gross profit, which is 12,450. 12,450. So now we are supposed to end there ideally, but because we have other income like discount received, so we do discount received. So we add the discount received with the other income that we talked about. What other income did you talk about? Anyone who remembers? What other income do we have? Commission received, reduction in bad debts, discount received. We can add them all there. So this is our new gross profit. Then we now start lessing our indirect expenses. Discount allowed, salaries and wages, the rent, the electricity, the bad debts, the postage, carriage outwards, all these. If we had fittings and fixtures put there deliberately, you can't add it here because that is what we call a capital expenditure. So when you total all these, the total is here. These are total expenses. So we subtract total expenses from our gross profit. What we're going to get is our net profit, which is 3,650. 3,650. All right. Any questions there?
Sir, is this the trading account?
It's a trading and profit and loss account. So the trading account ends up to here where we produce a gross profit. So this is called the trading account. The job of the trading account is simply to do what? To produce a gross profit. And the profit and loss account starts here. So the job of the profit and loss account is produce the net profit. So to get productivity, this is what we call the income statement. So I want you to use a positioning to do this whole exercise here, just to produce the income statement. And those of you who were here when we're doing the balance sheet, you can do the balance sheet as well. But those who missed today's class at lunchtime, listen to the video. So I'll send you this work that you can do. Then tomorrow being a holiday, I think I may need to meet you so we do a full question on the adjustments. A full question on the adjustments. So we end here for now, unless there are any questions.
Tomorrow, what time are we meeting?
I can get a suggestion from you. So we can either start at 12 or because I'll be having physical classes from 10 to 12. So 12 hours up to 16 hours, we'll be having classes. So I'll send a timetable in that projection. So you being the last people I'm meeting today, you can choose the time you want to be met.